Hey guys, I'm Lex, here with my amazing silly green shirt with flowers, and I wanted to talk about something that really piqued my interest. So I got this idea to compare traditional portfolios to portfolios with a small Bitcoin allocation. And just to give you some background, I am somebody who invests traditionally, so most of my investments are in ETFs and index funds, the traditional stock market. But I have been in crypto for about 5 years now, and I think it's a very promising space. I'm not going to be the one who's going to tell you that you should YOLO all of your money in there. I do not believe in that. I do see a lot of potential, but I'm not a crypto moon boy, right? And I think we need, in this space, we need some people who think rationally about this stuff, and that's what I'm trying to do. So I'm trying to have a more clear-headed voice when it comes to investing in crypto, and especially crypto's place in more traditional portfolios. So in the spirit of that, I wanted to show you some data which I think illustrates my point very clearly, because we're not just going to talk impressions here, we're going to show you clear data. So let's get into that, and I will explain what we're looking at. So I have these 4 portfolios open here using this backtesting tool, and I have compared 4 of these portfolios. Now, first one is the balanced boomer portfolio, which is kind of like the classic investment portfolio that most people think of when it comes to, a safe investment portfolio. That involves 60% of equities, stocks, and 40% in bonds. And that portfolio has returned 8.3% over the last 30 years, or about 8% over the last 10 years. Now, if we look at the same kind of portfolio but without bonds, because bonds have been doing very poorly over the last, basically since 2020, there has been like a pretty much minus 45% drawdown in the price of treasuries. So they've done pretty badly because of the interest rate environment. Anyway, the next portfolio is just the S&P 500. And you probably know this, but it has kind of compounded at 10.3% over the last 30 years, or about 12.3 over the last 10 years. And why is this time frame of over the last 10 years important? Is because when we look at portfolios with Bitcoin allocation, obviously we do not have data for Bitcoin more than 10 years because it basically kicked off in like 2013, I believe. So we do not have data on Bitcoin prior to that. That's why we're only looking at the last 10 years. I want to show you the portfolio with 2% Bitcoin. So this portfolio has 98% S&P 500 and 2% Bitcoin. It has returned over the last 10 years 19.5%. That is a very, very significant increase compared to the other 2 portfolios. If we go back to the S&P 500 portfolio, this one is just one product. It has, like I said, 12.3% in returns. The other one has almost 60% more returns with an allocation of just 2% Bitcoin. That, I think, is pretty outstanding, considering 2% Bitcoin is not really anything I would worry about risking. Even if you lose that 2%, no big deal. But if that 2% improves your portfolio's performance by 60%, that is very, very considerable. Something to keep in mind, these results rebalance every January 1st, and they also reinvest the dividends. So that means if you have a portfolio of 2% Bitcoin and you decide not to rebalance it, potentially this return is going to be even higher. Because let's face it, it's going to grow quite a lot faster than the S&P. That means its weight is probably going to shift higher than 2%. So if you don't rebalance it, you're going to have even more growth. What's also interesting, and I think is important to look at, is when we speak about returns in a portfolio, it also has to come from a risk-adjusted basis. Because 2 portfolios that, let's say as an example, generate the exact same risk, And I do have a nice graphic to show you what I mean. So look at these two portfolios, right? Investment A and investment B. Both of them return the same amount, but one has twice the volatility. Which portfolio do you think is better? Obviously the one with the less volatility. So we are looking at portfolios on a risk-adjusted basis by taking into account the Sharpe ratio and the Sortino ratio. These allow us to evaluate whether or not we're getting a good amount of return for the risk that we are taking. So we want to maximize the return that we get per unit of risk. And the way we do that is by looking at the Sharpe and the Sortino ratios of each of these portfolios. And just so you know, the bigger the number is, the better the risk-adjusted return. So we are looking to get bigger numbers here. The ratios of the 60-40, the traditional portfolio, it has for the last 10 years, 67, I have it actually written down here, maybe it's easier to show you. 0.67 and 0.89 of each of these ratios over the last 10 years. In an investment of 100% S&P has slightly better parameters, so risk adjusted it's slightly better. But when we're looking at a portfolio that has 2% Bitcoin, we can see that not only we have a massive improvement in return, but we also have a massive improvement in risk-adjusted return. That means that for each unit of risk, so we are taking less risk to earn those returns. So that's an excellent trade-off. Your whole portfolio is essentially less risky on a return basis than it is having the traditional or the S&P 500 portfolio only. That's because these assets classes are sure they're correlated, but they don't really move in unison always. Not only are we making much better returns, but also on a risk-adjusted basis, we are generating a lot more returns, which is amazing. This is exactly what we want. And I just want to show you a final kind of portfolio, which is the more aggressive one, 90% S&P and 10% Bitcoin. So that gives us 25.3% compound annual returns, which is mind-blowing. Like, it goes to show if you want to beat the S&P, like the simplest thing you can do is just buy the S&P and add some Bitcoin and you'll beat the performance of the S&P. How easy is that? And how little risk it requires you to take, because like just sub 10% Bitcoin, I think is incredibly safe. Like even if it goes to zero, your portfolio is safe. And looking at that in more detail, we can see that again, the Sharpe and Sortino ratios have improved compared to the other two. And I have the data out here as well. 1.13 and 1.72 if you have 10% Bitcoin. And this is basically what the returns look like when you put them side by side. Basically, the portfolio of S&P 500 plus 2% Bitcoin has over double the returns of the traditional portfolio. And the portfolio of S&P 500 plus 10% Bitcoin has 105% improvement over the S&P only portfolio. So that just goes to show, like, having a little bit of Bitcoin in your portfolio can dramatically increase your returns on a risk-adjusted basis, which for me makes that a no-brainer. Especially if you're younger, you can afford to have even crazier numbers like 20% or 30% Bitcoin. The returns on that portfolio are going to be amazing. Obviously, for older investors, this is not such a wise move, but still, even having 2% of Bitcoin, if you want, you can still hold your bonds, right? We can run that simulation now as well. Let's go back to, I'm going to just duplicate this. If we have S&P, let's say 80% S&P, 15% bonds, and then 5% Bitcoin. This is let's say a portfolio for an older investor. Still generates 18% compound annual returns over the last 10 years, which is absolutely stellar. And although when you do come down to look at it, I'm going to pull this up here with the comparison of the ratios. The 5-year, the 10-year adjusted returns on the Sharp and the Sortino are just slightly, ever so slightly better compared to the portfolio which has S&P 500 plus 2% Bitcoin. So I would encourage you very much to open up one of these backtest calculators. I'm actually going to link this one in the video, and make a variation of your portfolio in the calculator and add some Bitcoin, see how that potentially changes your results. Because I think this is kind of like the future of traditional portfolios. Just having 1 or 2% of Bitcoin in your portfolio can dramatically improve the results. And it's really worth it, because 1 or 2% really isn't anything to be afraid of losing, right? Even if you think Bitcoin is worthless, even if you think it's going to go to zero, there's always a small chance that you might be wrong. And that's what got me investing into Bitcoin myself. I thought, okay, what if I'm wrong? Then I want to have some exposure to this. I had 1 or 2% exposure. Over time, that exposure has grown organically because I have not really like trimmed my positions. I kind of have the habit of letting my runners run, so I don't really rebalance that often. That allocation has grown, and that contribution to my portfolio has been amazing. And I strongly recommend anyone to kind of look into this and research this and play around with this tool to see how much your traditional investment portfolio can be impacted by even a tiny amount of Bitcoin, because I think that's a very wise and rational thing to do. Of course, we're not talking about anything crazy like the crypto moon boys will tell you, oh, 50, 60, 70, 80%, 100% of your portfolio should be in Bitcoin because the US dollar is going to zero. I'm not here to comment on that. I'm here to try to look at this based on data and based on rational and objective, or what I at least feel is that way. And yeah, anyway, if you enjoyed this video, I would very much appreciate it if you gave me a like, because it helps this small channel a lot. And there's plenty of more of these investing videos with a bit of crypto spice on top coming your way very soon. So thank you very much for watching, and I'll see you in the next one.